Hi, I'm Adrian Strittmatter. Welcome to Bricks and More. I'm the CEO and co-founder of SAENTYS, a global creative consultancy specializing in destinations, real estate, and the hospitality sector. Bricks and More is all about exploring how to generate, unlock, and maximize real estate value. Our mission is to challenge outdated and limiting notions of how this is done. In each episode, we talk to top professionals to uncover innovative strategies that drive short, medium, and long-term gains. So if you're passionate about making real estate more valuable for more people, you're in the right place. Welcome to Bricks and More.
Real estate is evolving fast. Institutional capital is ready to deploy billions, but where's it all going? And who's building platforms that can scale, perform, and meet the needs of a more operational, tech-enabled asset? In this episode of Bricks and More, we're asking the big questions. How do you spot the next breakout OpCo or PropCo before they hit scale? What makes real estate platforms investable in 2025 and beyond? And how do we unlock value, not just for the asset, but for the people and platforms that bring it to life? Today's guest is Rebekah Tobias, co-founder of Propela Ventures, a bold new investment platform backing early-stage, tech-enabled real estate operators in the living and hospitality sectors. With over 20 years of experience spanning capital markets, private equity, venture capital, and operational real estate, Rebekah brings a rare blend of institutional insight and entrepreneurial drive. From co-living, later living, BTR and serviced apartments, she's helping shape the next cycle of growth in Europe's real estate landscape. Hi, Rebekah. Welcome to the podcast.
Hi, Adrian. Thanks for having me. Lovely to see you, as always.
An honor and a joy. Let's start off with quite a personal question. Obviously, you've got a long career sort of stranding real estate across different elements, different sectors, and different ways of working within that ecosystem. But what attracted you to real estate at the beginning then? What was it that brought you here?
To be honest, it was really a means to an end. I needed to earn some money to pay my way through college, actually. So I moved from Pennsylvania to California when I was 18. I took a gap year and got my in-state residency in California to be able to go to a state school, which was largely subsidized. So I paid very little, but I needed a job, obviously, when I got out there. And I worked in property management for rental business, holiday homes along the coast. And from there, moved to work for a commercial real estate appraiser. And I thought, this guy makes decent money. He's doing quite well for himself. He was an entrepreneur and got more involved in actually the appraisal process and thought, this isn't that difficult. It's quite interesting. So we were working on a lot of big commercial projects at the time. He allowed a flexible schedule so I could go do my university courses and come back. And I was basically working full time, cash into the table, was making decent money and thought, hey, I might as well give this a go.
This is great.
And then I did a study abroad in the UK at Cambridge University and didn't go back to California because applying for jobs, I wanted to be back on the East Coast near family. So that's when I applied to CBRE in New York and got a role in their valuation team and then was properly trained and qualified in New York. So that's what kicked it off. I don't think anyone, well, now they do actually see real estate as a proper, career and there's master's degrees and there was none of that really existed.
So opportunistic.
25, 30 years ago, very opportunistic.
So well, that leads me very nicely. A great segue to my second question, which is obviously, you spotted an opportunity, you went after it within that sector, within real estate. As you said, you're going through an entrepreneurial chapter. What's pushed you towards that, taking it up, going on your own, sort of moving forward on that side? What's inspired you or motivated you to do that?
Good question. I think I've always had quite an innate entrepreneurial spirit, mindset. I've always been driven, ambitious. I've always, training in the corporate world was fantastic because it gives you such a broad range of skill sets because I moved around quite a bit to different departments, obviously moved country as well when they transferred me from New York to London. And that really laid the foundation for the rest of my career. And I spent almost 10 years with CBRE, learned a lot, had a broad network by the end of it. and then moved, with an agency to Cushman for a bit. And I thought after all the advisory years, what do I want to do next? And worked for some relatively small to mid-sized companies after that, which were more entrepreneurial in the fact that the CEO founders were,
Actively involved within the
so
business.
active, whether it was setting up new businesses in alternatives and prop tech, and back before it was even called prop tech, and just doing different things, and real visionaries for their time. And I was really inspired by that. So I thought, eventually, when I think that I have enough
It'll be me.
skills, experience, contacts, all of that, how do I bring all that together in my own business? And what is going to be the most lucrative opportunity further down the line as I go into the next stage of my career? I'm not getting any younger, obviously. I got to, I call it my midlife crisis fringe to cover my wrinkles.
You've coined it.
On my forehead. It's cheaper than Botox.
It's cheaper than Botox,
and
indeed.
so, I have a good, 10, 15, 20 years left. And what do I want to do with that remaining time? And also leveraging just all of these relationships. And that was across moving into more of the family office space and doing a lot more, not just in real estate, but also private equity, venture capital, investing directly in tech businesses as well, or tech-enabled businesses. And that just opens up so many different worlds. And you're thinking, how do I really leverage all these different ecosystems that I've been tapping into in the right way? Because I don't think traditional real estate investing works anymore in the way that big businesses approached it, where you buy an asset and then it doesn't perform as well as you think. And then you're trying to back solve for operations and tech and all the things that we know drive the underlying value of the real estate. And it's sort of an afterthought. Oh God, no, actually, what technology do we need? What operational people do we need to bring in? If you approach it actually first by solving those two key things, and everything's moving in an operational way, whether it's how we live and work, obviously with co-working and co-living and all the different subsectors now of residential, which is the space that we decided to initially focus on. It's changing so much.
And would you say that pattern of sort of behavior of what you're putting first, the kind of process, is that real, the gap that you spotted in the market and the way of approaching it differently?
Yeah, I looked at my last experience, with the Markle business was great because, again, they're very entrepreneurial, made their money in real estate, but they did it in a very different way. They bought operating businesses and they bought asset-backed operating businesses, and they managed them in a private equity way and scaled them in a private equity way. And that was a very different way, again, of accessing real estate. They would acquire the business that owned the real estate and then help them expand. So I really enjoyed that process of understanding, that approach to it. And then just we built operating businesses from scratch. Really difficult to do. That's why not many people are doing it. But I do think in the European landscape, there's going to be more and more newer operators that take the tech approach from day one, that are going to be building new brands, scaling new businesses, and all these subsectors of real estate that we're seeing emerge now that are still kind of considered alternative, but really will become more mainstream over time, because that's what, later stage private equity looks for. And in Europe, you have obviously the nuances of the difference in languages and cultures and legal systems and regulatory frameworks. So you're going to need new operators in each of those markets to really specialize in a particular sector. So
for you, the value very much lies in those two pillars that you've mentioned, the tech-enabled and operationally led, then.
Absolutely.
To be able to create new value.
Yeah. But also it's a way of building your real estate portfolio, because operators unlock much better deals on the real estate side. They can dig out some interesting deals off market that, as a fund, you're not necessarily able to do.
Pure real estate fund,
pure real estate fund. Landowners like to deal with the end user. If they're selling their land to the operator at the end of the day, actually they can negotiate better terms, or maybe do it in a JV structure where the owner puts in the land and wants to help the operator develop it out. So they do unlock, we found, much more attractive opportunities on the real estate side from a pricing perspective, but also then you already have the operator in place when you're buying the real estate, rather than, again, trying to back solve for the operations later.
And it's really interesting because you're talking about the operator. What are the things that you'll be looking at? Because obviously your goal here is obviously to scale them, to bring them to the next level. But as those early stage operators, what are the things that you'll be looking for that will say, yeah, this is the right horse to back, if it were, or to bet on?
Yeah, so the criteria, I mean, in a very venture capital way,
Yeah.
we're underwriting the team, the individuals, the track record that they bring to the team, or have they worked before together as a team, or is it a new team? So we're analyzing all of that. We're doing due diligence on the individuals, whether it's interviewing previous colleagues or customers, or in the same way you would do backing an early stage venture business. And so that's the first tick. And obviously in operations, we want to see that they've had senior position in operating businesses in the past, at least 3 years experience. We don't want to be too prescriptive in terms of how many years they've had, because there's some really young, really good operators. So we want to be sure that we're backing the right talent, regardless of age. But it's just, also people with new ideas. I mean, there's so many kind of disruptive new ideas in each space we're looking at. We are looking at a senior housing operator that are doing things very differently, looking at active lifestyle communities, what amenities that they need. And so you want new, fresh ideas, and it's not necessarily going to come from a generation that has 20, 30 years experience.
Exactly.
So
Yeah.
we're always looking at the right team, the right fit, the right alignment. Alignment's so important. I see so many private equity guys, I hate to say, still getting that wrong in terms of how they incentivize management teams, the structure that they put in place once the business gets acquired, and it very quickly goes wrong if there's that misalignment.
A different approach to, yeah.
Exactly. Whether the people aren't compensated the right way. I've seen many cases of that still occurring. So I think it's really important to structure that
Well, a true partnership
from the start.
in
In a
essence.
true partnership,
Yeah.
exactly.
Yeah.
But also it's the approach that things aren't always going to go well. Obviously, you want a backer or an investor in a partnership that's really going to be along that journey with you, especially early stage. A lot of things are going to go wrong, let's be honest. And when, shit hits the fan, so to speak, you want a partner that's going to say, right, let's buckle down, let's figure out what we need to do, how do we get ourselves out of this, but not laying down the hammer and saying, you guys fucked up, how are you going to fix it?
It's all
really
your fault. Yeah.
Exactly.
Yeah.
It's really meant to be.
There's a balance, and I know we discussed this on numerous occasions, between new, fresh ideas and proof of concept. How do you get that balance right? Obviously, Europe, in some instances and some markets, is quite advanced, and in others is in its infancy. With regards to the concept, the operator concept, how do you balance that fresh idea with proof of concept?
So the main investors behind early ideas and showing that proof of concept happen to be, our investor base is largely family offices, high net worth individuals that are willing to take more risk with earlier stage operators and businesses that will back an idea and a vision and believe in that team to deliver it. And that's really what it is. Can this team execute the business plan? And do I buy into it? And so that's going to be more private capital. A lot of operators aren't in those friends and family networks where they're going to be able to raise that early stage funding, which is why we wanted to do it in a more structured, professional, institutional kind of way. Even if it's a super early stage business, you want to build that from scratch with more of an institutional mindset, because ultimately that's your exit.
That's your exit strategy,
So that was our goal initially, is to set up a platform to enable new operators to do that. But it'll take shape, and I'm sure our business will also pivot and morph and do other things. We're starting in living, but I'm sure we'll broaden that scope quite quickly into more niche sector. I say niche now, but obviously these are growing sectors in their own right.
And have you seen, I was going to say exciting innovations you've seen in the space, but things that have, maybe worked somewhere else and have had to be tweaked or adapted to work in a new market, or literally brand new ideas? I mean,
I think it's just so interesting how technology is shaping everything that we do. I mean, look at how we structure our day, or our use of AI in a personal sense, and how we can then start applying that in a work sense, which we need to start doing more, because I use it, almost every day now. I see there's a lot of really innovative ways of kind of managing these operating businesses, largely automated through the tech. And examples of that, I mean, in living, it's still very much hands-on. Certainly in hospitality, you need to provide a mix of providing a full tech-enabled journey for those sophisticated enough to
To use it
utilize the
and to
tech,
engage with it, yeah.
but you still need to cater to perhaps an older generation that's not as tech savvy. So you need to provide both in terms of hospitality. And that's also in the office market as well, right? So it's similar things applied to both commercial and residential. The interesting niche ones are like self-storage and how you automate self-storage use now. There's, the car wash industry, for example, these really niche
That's
sectors.
still going?
Oh yeah,
The brushes?
that's still going. But look, we are not in any way close to a society that's not going to be,
Yeah, it's true. Yeah.
driving cars every day. We're certainly still going to be needing this. There's marinas, there's campsite, all these different business, caravan parks. Look at the holiday parks model. I mean, all of these different sectors are going to be changed in such a big way through tech automation. And I think those operators that are getting that right will be the future.
Will be the ones of the future.
For sure.
Out of all the asset classes that you've worked across, why have you chosen at this stage in this new adventure, why have you chosen to focus more on the kind of broad living sector?
We've just looked at the opportunity in, so-called beds, because obviously everyone talks about beds and sheds. And we thought, actually, you need a lot more operational know-how and expertise than you needed 10, 15 years ago. And especially in residential, you have all the different subsectors of residential and senior living. We're doing a lot of work in student, not just PBSA, but aggregating HMOs, which is another strategy we like, which is a pure just aggregation, build up to scale, create an institutional product, which has been done in other sectors as well, industrial, et cetera. We thought there was more opportunity to focus on that segment. And also a lot of the inbound approaches we were getting were largely from residential operators. So we thought, let's start there. Also, when I was in my previous firm, we were a very early investor in a co-living business in London, long before co-living was even
Coined
a thing.
co-living. It was still an alternative.
Coined co-living. It still is a gray area. But again, that's now starting to really become far more attractive from an institutional perspective. So it's getting in earlier into those subsectors of residential. And then also just the economics and the demand is always going to be there. We need housing. We have a housing shortage pretty much everywhere. The multifamily sector, as it's called in the US, which is massive, doesn't really exist still in Europe in a big way. And that will continue to evolve, obviously. We're going to see larger multifamily operators and investors coming into Europe because the opportunity is there.
And do you think it's more one of the reasons maybe that some countries are lagging behind is the difference between the size of the rental sector versus the size of the sort of independent landlords that own their houses?
Well, if you take the UK as a prime example of that, where it was very much a buy model for a long time, and even you see that in retirement living, I don't think that's still going to be the case in the next 10, 15, 20 years. So you need to build product with that in mind, where you're seeing the change in trends from buying to renting and more flexible models. So it doesn't even need to be renting, but there are different models I'm seeing in the retirement space that are really interesting. And then you're thinking about, obviously, that baby boomer generation. They're a bit more savvy than, it depends who you're appealing to, right? Whether it's an 80 plus or a 60 plus. But these new models will obviously filter through the generations, and you'll get to older demographics and they'll start to understand it more.
So in the work that you do of sort of identifying these operators, obviously the demographics and who it's appealing to are really important.
Super important.
Do you see real differences in, I know it seems obviously between, I'd say, was it Gen Alpha, I think now, versus sort of seniors?
I don't know, what the next one is.
Do you see real differences in the way that they occupy or live in space in terms of what they're looking for? Yeah?
Absolutely. Every generation has its own, and also that's largely tech-driven, right? It's how tech is really taking over how people just run their daily lives, right? And how they want to occupy space is a huge part of that. I've seen homes now that are virtually like fully automated. You walk in and you touch a few buttons and everything just starts working. That is absolutely going to be happening. But across, student housing, as well as senior living, especially in senior, there's a huge tech play in senior because you think about, you want people there, active lifestyle initially, but with some access to care. And there's going to be, elements of that are, again, going to be automated in a lot of ways. So it is really going to change the landscape for
The
sure.
landscape, I'm sure. Do you think within this kind of new, let's call it operated living space at whatever age you are, do you still think home ownership is still the ultimate goal, or you can kind of, you've got this sort of serviced way of living and
No,
actually
I
I'll
really
start
think,
going
again, that
elsewhere?
that's very much an older generational thing that sort of will start to die out. I mean, as I get older, I think, how do I have less responsibility
Yeah,
over assets
yeah.
and,
Hmm.
owning things? I actually want less. Again, if you can rent a car versus buy a car, which is a
Yeah.
depreciating asset in most cases, and same with homes. I think people will be less attached to that family home. Also, as you live longer and you're more active
That's
for
true.
a
Yeah.
longer stage in life, you are going to be living totally differently. You'll be
Hmm.
traveling more, you'll be far more transient. You want more flexible living choices, but also having that care element at the touch of a button or whatever it's going to be in the
Mm.
future. That will also exist so that they can travel more comfortably knowing that there's services on the doorstep that you can utilize. But it's that's going to look totally different.
It is, isn't it? You could
Um
kind of map out a kind of asset or sort of asset life cycle kind of in parallel with the way that people occupy residential space along the different periods of their life, which is
yeah.
now longer and probably, as you said, more transient and more
Yeah.
varied, and spot the opportunities in that way as well.
Yeah, absolutely. I mean, in the next 20 years, a quarter of the UK's population is going to be 65 and older. That's very much a trend in the rest of Europe also,
Mm,
and we do not have the housing stock. None of these people, I don't think, want to live in their family home that entire time. One, it's too big, it's too cumbersome to maintain, and you want to unlock actually those larger family homes for younger families moving in. I think the planning system needs to change, and
mm.
public-private, partnerships need to help move that along faster.
Is there support for those new, let's say you go in with a new idea and you're sort of potentially even looking to have the real estate component, so looking for planning. How are you
It's
normally
really
received
Well, it really depends on the local
on the local council?
council.
Yeah.
Yeah. And especially in the UK, whether that's Labour or
Hmm.
Conservative, it really varies so much. You have to have the right planning experts on the case
Mm.
to get anything through. But when we were building self-storage in Germany, we were putting co-living in because no one understood what self-storage was, and we'd get consent easier. It still took as long because it was through COVID and
Yeah, exactly.
no
Yeah.
one was showing up
No,
to
showing up to
work.
the meetings. Yeah, exactly.
But there's ways of getting it through and appealing to what the
Mm.
planners want to see in each location. So you have to be a bit creative and clever about that.
And how you get it through.
Yeah.
And specifically about sort of value creation, could you point us to a few or talk us through a few like case studies where you took a sort of a real estate asset or an operator, got it tech enabled and really saw that value sort of grow over time and really saw all the kind of elements, I would say, that you saw to be value levers to really come to the forefront? Have you got a couple of case studies you could share with us?
Yeah, I'll use a case study with the self-storage
Yeah.
business where we had the benefit. And again, executing a business from scratch is tough in any market,
Yeah.
but we were trying to do this through COVID in a really challenging market where
Mm.
construction costs were also skyrocketing and, wars breaking out. It was just a really tough macroeconomic environment as well. But we had at least the benefit of doing it with the tech already there from day one, and because it was a sort of develop build out strategy, or we
Hmm.
were converting existing assets, but we could put the tech in place from day one, which not many operators have the benefit of doing.
Of
Once you
doing,
have
yeah.
existing stores, you're not going to go back and retrofit in many cases, especially with digital locks and access controls and all of that. Hence, the future of that will be fully an automated
Completely
experience.
automated, yeah.
You probably won't need anyone on site, maybe one person in the future just to check in on things. So that's really changing the storage world
Mhm.
generally. And you can apply that to probably logistics as well. You can apply that to different subsectors of storage, cold storage, open storage. It's all
Mm.
automated. In student, interestingly, we are working with a fantastic operator in the UK, and we're aggregating smaller HMOs and HMO portfolios. There's a few other players in this space now. And obviously, that's very granular assets. So you're talking many properties, many units, many tenants per market. And you need to be able to operate that efficiently. And the only way to do that is have good tech products that speak to the students. And so you can have easy communication, because these are also older properties. So things are going to go wrong. You're going to have more leaks. You're going to have more maintenance issues. So you need to be in constant communication with the students and your tenants to solve those issues quickly and build a brand that's synonymous with good, quick, easy communication,
Quality of service,
safety, security, all the things that you'd want.
And are you seeing specifically on that example then, the stock, the living stock, are you seeing people coming to you or would be coming to you with portfolios of going, look, this is where we currently are at the moment, or you spot the opportunity and you invest it, say, look, we could really make this work with this new tech-enabled, operationally led business model?
Yeah. Well, all new age operators, new operating platforms that are spinning out of existing businesses or, seeing the opportunity in the market now are pretty tech savvy. Because if you think about, prop tech has been around now 10 years under the prop tech brand.
Exactly.
And all that tech exists. It's available off the shelf. What you need to be smart about is how you curate your, build your tech stack and curate those products in a way that is the most efficient from an operations perspective. And that's everything from your booking system, your CRM, your property management system, how that links to your back-end accounting finance functions. That's still actually difficult because not all products work well with others and plug into others. So you do need to have, some
it can't be a pick and
tech
mix,
people involved in that process to help you get it right. But the tech exists, whereas, again, building it from scratch, which some operators did really well back in the day. M7, as an example, they built Coyote, their asset management system, because nothing else existed to manage really granular assets and, thousands of tenants and all of that. But what I find really difficult is that we're the largest industry in real estate. We're the slowest to adopt new technology. Investing in the tech on its own doesn't really move the needle because in a lot of cases, the tech guys aren't speaking to the real estate guys,
we've talked
and
about
vice
this
versa.
Yeah.
And so there is a total breakdown of communication really between the two. Also, when building the tech, you kind of want to do it actually with a case study or an operator or a landlord in mind to really test that product and make sure that it works and you have product market fit immediately. And the difficulty in investing in prop tech is you're just not sure who's going to win in that particular space because it has been so relatively new. And a lot of these businesses are struggling to scale, again, because of the slow adoption rates, slow sales cycles. As soon as the market turns, we've seen an immediate drop-off, which we've seen also recently in investors making decisions, right? And as soon as they put decision-making on pause, the first that get cut really is marketing budgets, tech budgets, anything that's outside the main day-to-day.
The main day-to-day,
And they see all these things as like ancillary,
plugins
that do add value over time, but we don't know how much value they create today. So do we really need them right now when, other things are a bit more pressing in the portfolio, which is understandable, but that is super tough for a tech business.
Looking at opportunities across Europe, is there any specific market or region where you feel in the space that you're looking at, in the asset class that you're looking at, that there's an area where opportunity is ripe for the taking, where there's really some lag? Because obviously different markets have got different levels of maturity.
Yes, very good point. I think the Nordics are super tech savvy and they're years ahead of the rest of Europe.
Why do you think that is?
I think the Nordics have a real entrepreneurial spirit as well, and they've just gone into it and kind of leaned into tech in a much bigger way, with just a bit more motivation and conviction behind it. And so they're just doing things in a more advanced way. Especially with climate, if you look at the climate tech that's available there. So I know it's just something culturally as well that is there that they've taken advantage of perhaps earlier than the rest of Europe. I think Germany has needs to make, I should say, huge tech advancements and hasn't quite gotten there yet. I mean, there's very little digitalization across Germany, as I can tell in doing business there.
Mhm.
It's pretty archaic still in some ways. I mean, just in, doing deals there and how they transact, and signing an SPA still requires a
Yeah, I mean, a whole
person
raft of,
in the notary office. It's
Yeah.
really, it's very cumbersome. It's they need to evolve quite a bit, I think, and really push tech in the right way. The UK is pretty tech sophisticated, I think. Netherlands, because I live between London and Amsterdam now, is really advanced.
Mhm.
There's a lot of great tech in Netherlands, Belgium as well, Benelux in general. Spain and Portugal are on fire. There's, in the right ways, it's really hot market, but there's a lot of great things happening in Spain and Portugal now that have been evolving for some time.
Those markets were very difficult for a period of time. What do you think's changed
Yeah.
that
Well, I
they've now
think,
become hot property again?
well, you've seen post-Brexit, the entrepreneur kind of relief that the countries were offering, but also the golden passports,
Mhm.
driving internationals into those major cities, also opening up for business as well. And a lot of businesses opening offices in Spain and Portugal, really driving, commercial as well as residential
well as
demand.
residential,
And
yeah.
so, I mean, those markets are booming right now. It's unbelievable. Whereas I remember when early investors were going into Spain and Portugal thinking, oh God. But
That's
it's,
been a quick transformation then, hasn't it, really? If you
yeah,
think about it.
it has been quite
Yeah.
quick, but they're really beneficiaries of a lot of, well, also the other thing that drove that was COVID and being able to work from anywhere. So a lot of people moved to Spain and Portugal during COVID to have a better lifestyle, better weather, and would go back and forth. I have a good friend who bought a place in Portugal during COVID and was going back and forth and still able to, manage work quite well. So it's that flexibility in working from anywhere. That's going to increase for
Yeah,
sure.
exactly.
Because for the first time ever, when I go back to the States in the summer in New York, no one is in the city in the summer. Whereas you'd go in July and August previous years, everyone would still be
Still be in the city,
working.
yeah.
They'd take Fridays off and they'd go to their beach house on the weekends. But now everyone just clears out of the city. So you're seeing this happen.
Changing patterns.
Yeah, change in patterns everywhere.
Ultimately, you want to obviously identify those sort of operators, tech-enabled operators, and take them on a journey of scalability to be able to bring them to the next stage. So you're really sort of in that middle gap. Are there not that many other operators who are interested in that or taking the risk in that? And also, what is your journey of scalability? What's your formula? We were talking about taking the
Yeah.
partners on the journey with you. What's your
Scalability
kind
is
of
a
thing?
big one because that's how you attract your institutional exit.
investor. Yeah.
That's the first thing they're going to look at is how scalable is this? How much capital can I deploy into these businesses in a meaningful way? Because, we've tracked the top 25 institutional funds in Europe, and there's about 300 billion that needs to be deployed over the next 5 years. So they can't sit on the sidelines for too long. They're going to have to start doing things, and they want to find platforms. It's really moved to platform scaling, building, exiting in a much larger sense, whether that's a public or private exit. But they want to own and operate those businesses largely, and they want to be able to deploy at least 100 million, if not more, into these
So
strategies.
that would be the entry point when
Yeah. I mean, they'll go down to maybe 50 million, depending on what it is. But, with the storage business, it was really hard to get to 100 million. It is really hard to get to 100 million today. It's with a lot of these niche strategies, it's very difficult when you're just doing organic roll up site by site.
if you didn't have the help of the
Exactly.
the scalability partner.
And so I think it's easier to build the pipeline. And if you do that through a combination of M&A and deal by deal, asset by asset, which a lot of operators are doing. Also on the M&A side, there's so many businesses that will be consolidating, especially in the sort of niche sector space. They're highly fragmented sectors that need some consolidation, M&A. So there's a huge opportunity there.
For a kind of roll-up as well,
A
then.
roll-up, yeah. scenario, and then just organic growth deal by deal. But then that's also largely based on access to capital. And not many of the early stage investors have that access to the right strategic partner from a capital point of view that's going to, again, take the risk on a team and a pipeline. They're going to want to already see cash flowing businesses, which again are hard to get to at scale.
So what would be your time frame then, really, to get it? I mean, obviously it's a bit of a,
it's
sort of
always a
open-ended
chicken and egg
question.
thing,
Yeah,
isn't
chicken
it?
and egg. But would you say, sort of, if you had to write a kind of case study, what are we talking about? 5, 7, 3?
I think it is from, where we are today, 5 years, I see a huge potential for growth because you're also starting at a much lower entry price today. And I speak to a lot of people day in and day out about the market. They're still quite negative on it. If you're a new business, look at the last crash. We were here in 2009, 10.
We were.
We were. We actually were.
We were.
Working together. Trying to put our deal brochures together. Trying to survive. But I mean, yes, it's difficult. It's difficult in any market. But now is the best time to set up your own business and take that risk because you're starting off on a way lower basis, than you would in any other market. Now, we're not calling the bottom of the market. No. But when we've seen prices come down significantly in the last few years, we don't know exactly what the trajectory looks like, but we know starting off today, you're going to be in a better position in 5 years and even more so in 10 years. We also like to look at not anti-cyclical plays, but, it's structural changes that are making a real difference to these sectors that really has not a lot to do with the wider economic circumstance and macro environment if you're tracking the right trends that are sustainable for the long term, which is really the technology. That's what's driving it.
That's what's driving it.
So that's not going to change. Technology is moving at a pace that none of us can really keep up with.
And I want to circle back to, obviously, we were talking about sort of family offices as an example of people that would want to invest. What defines them? What are they looking for? Why are they open to new ideas, getting in at that entry point? What is it that really defines them as a really interesting investor set?
Yeah, they're all so different. Everyone asks me this question. There's no one size fits all with family offices. They are all so different. Depends on what generation you're on. If it's first, second, third, fourth gen, the longer they've been around, the more sophisticated and professional they are as far as a sort of business and how they run it and the number of people involved. But the general theme is just pure opportunistic investors. So they're looking for the best opportunity in the best market that's going to give them the best return. So it's hard to generally speaking, they want to double their money in 3 to 5 years, ideally.
3 to 5 years, double the money,
that's on a real estate play. Obviously, if you're looking at venture and private equity, it's a different risk profile. But, it's difficult to tap into that world for sure. Once you're in with a few, it's obviously much easier because they open the doors to all their friends and family, and then it's word of mouth. But you kind of need to go to them with a strategy because they don't necessarily sit there and think, what's my strategy? Unless, again, they're a more professional, multi-generational outfit that has, in-house teams covering these different aspects of private markets. But generally speaking, the smaller ones, and by the way, we're going to see tons of family offices emerging through this next cycle. Because if you look at the big tech exits and the generational wealth transfer that's happening now from baby boomer to next gen is huge. I mean, I don't even know the numbers behind it, but it's enormous. So that will become a much bigger play in the real estate space, I think, is that sort of private capital coming into it, which is not tracked really.
No, exactly. That's the thing.
That's the thing. You only really look at, because it's more transparent, what the institutional funds have raised. You're not looking at what amount of capital the family offices are going to be controlling in the very near future, and how much of that will be allocated to real estate. It'll be about, whatever it is, tens of billions, if not hundreds of billions, and roughly 10 to 15% of that will be real estate.
So jumping to the operator, assume I'm an operator, I'm coming to pitch to you. What are the things that, we talked about the founder, are there any tips that you could give to really bring them along that value journey of creating that value for their operating platform? What is it that you would be looking at, apart from the energy and the drive?
Yeah, of course. I
Yeah.
mean, just you're, backing good entrepreneurs, right? That have a vision, that can articulate their vision, and then they're giving you conviction in their ability to execute that vision,
Yep.
ultimately, is why you're investing in them. And there's so many great real estate entrepreneurs. I think a lot of them probably are still stuck in bigger businesses and have high living costs and high school fees, and there's
barriers
reasons,
to exit or entry.
exactly.
I don't know which one it is.
There's barriers for them taking more entrepreneurial risk, but I think there's so much good talent out there that we're going to see more and more people hopefully taking that level of risk. I mean, my family has taken, between my husband and I, who's also an entrepreneur, taken a lot of risk, but we've also made huge sacrifices lifestyle-wise, moved country, lowered school fees. Not many people are willing or able to take
do that,
those level of sacrifices. So I understand. And I wish more women generally were also taking that level of risk, because there's such a huge opportunity for women. Not that people are largely focused anymore on sort of the diversity play, but we also need to be building our own track records and just earning that respect as principals, as deal makers, as investors ourselves, because I've had more recently, that 60 plus generation that still perceive women in a different way, obviously, and who actually said, oh, well, you guys are great at capital raising and investor relations, but who's going to do the deals? And I was like, well, I think if you look at our
track record,
previously, in large part, it's transactional, but we're doing it on behalf of other people, really. And so you don't get the credit necessarily.
So picking that apart just slightly, or just sort of, you've got the tech element, you've got the real estate element, and you've got the operational element. Do you find those barriers in all three at the same level, or different levels depending on those kind of like three subsectors?
No, I mean, there's obviously more competition in a pure real estate play. So when you're building a new business, the questions you'll get is, what is your USP? How do you differentiate yourself from everyone else trying to set up funds and do the same thing? And I think the answer to that is, how are you approaching investing in assets? Because we approach it through operators, and the tech is part of that. And generally, looking at obviously where the biggest growth is going to come from in the future from a sector point of view, and putting the two together. But also it's, again, tapping into those different ecosystems. The tech world's very different from the real estate world, which is very different from the venture private equity world. And so the diverse networks that I've been tapping into in and out of for the last, 10, 15 years, really, that's what's kind of driven me to set up my own thing at some point, is how can I bring all that together? Because not many people have access to those different worlds.
Network,
they're very much, operating in silos, as you did historically. And so even in bigger businesses, I mean, I see so many opportunities for cross-selling, and there's a lot of low-hanging fruit with the technology aspects and bringing in other skilled people into different businesses to give them an edge. And I think more and more of that will start happening.
Do you think real estate is, I think going back to that silo or that asset class subdivision, is becoming more and more hybrid, which means that there are more opportunities, new players coming in, ability to innovate a little bit more than, and that's a very long question. And then is the planning departments, are they following that? Because if it's not categorized strictly, how do you innovate if the market or the planning department's not following?
Yeah, that's a really good point. It's going back to just having the best team possible with the right connections, because ultimately at the end of the day, it's a relationship business. It's still all about relationships. To bring new innovative models to new markets, you need people on the ground that know people, that know the planners, that can convince them that it's the right thing to do.
It's the right thing to do. And it's going to solve the problems that they have in that locality or municipality.
But, public sector, they aren't thinking very commercially, right? So you got to approach it
Yeah.
in a way that appeals to them.
It's going to solve their problem that
yeah.
they have in their for their constituents. Or
Exactly.
Yeah.
Especially with the senior, we're trying to keep residents in your local area, just move them to better quality facilities. They almost view it as, oh, you're going to take, we're going to lose residents as a result. Yeah. Which is, it's all in the way that you position it and really make your case. And really get the community involved, by the way. There's a fantastic senior living site that's been bought by a family office and that I toured the other day, and it's absolutely unbelievable. But what they had to do to get that through planning was, years in the making, but really getting the community
and now
together.
They're part of the community.
Yeah.
Yeah.
Oh, yeah, absolutely, in a big way. And have a wait list of people in that community that want to move in.
That want to go there. Yeah.
Which hasn't even broken ground yet, but it just... it's obviously a lot of work to put all these things together.
Couple of final questions.
Yeah.
The podcast is all about the bricks and more, and I think we've gone into the more around the operational side and the tech-enabled side. But on the journey that you're going to be taking these entrepreneurs to that glorious exit, what is it? We hope. Oh, that's the plan, at least. That's the plan. How would you define unlocking value? What is it to you? What does it mean to you personally and professionally?
I think true value and alpha creation today is very much thinking outside the box, thinking differently, not following the herd, which is such a common thing we see in real estate. As soon as someone goes into a sector in a big way, we see everyone else piling in. It's how do you create value by being the first mover in the market and sort of build on that and bring other people along with you. And again, that a lot of that is bringing different worlds together, different ecosystems, different skill sets, and moving things along faster. The rate of change is so slow at the moment when everything else seems to be moving so
super quickly.
Fast.
Yeah.
You're like, how are we going to catch up? I don't know. I feel that urge to move faster and build businesses just doing things differently, bringing different skill sets and thinking about things in a different way. The bricks and mortar is your underlying value, really.
It's your frame or your canvas on which you to
and asset-backed
yourself.
Operating businesses, the large, a large part of the value is the underlying real estate. But there are so many other factors driving the value of that real estate today. It's not just having a good asset and property manager. It's, the whole... life cycle, it's the whole tech stack. It's especially from now an environmental point of view, what we need to do to ensure that we're building future-proof, sustainable assets. And that requires a lot more skill than it did 10, 15 years ago. So it's got to evolve quicker. And I'm hoping that a lot of these entrepreneurs are going to make that happen faster. So that's kind of what you're buying into.
And come and see you and scale up.
Definitely. Come and see us.
Come and see us. The door's open.
I'm not saying we can work miracles.
No. You still need a good business to be able to. No, exactly. But Rebekah, this has been an absolutely, a joy to have you on the podcast.
Thank you so much, Adrian. Well, I love speaking to you. We've known each other so long.
We have, and also, we talk often.
Yes, we talk often. We have so much to do as well in our portfolio companies with marketing and branding and communications, and how important that branding is. If we look at, Adam Newman's new thing with Flow, it's really just We Live. He just rebranded it. It's the same exact sales pitch, but how important that brand value is. It's huge in real estate.
No, especially if we've seen, and especially with even in our own way with the agency, we've seen how brand and marketing can add value to propco situations where the brand is recognized. People, before you go and pitch, have heard about the name, heard about the operator, heard about the brand. And it is part of the purchase price. You're also buying that brand. You're
Absolutely,
buying
the IP.
The IP and everything. So it's... I'm glad that you see the importance of brand and marketing.
I absolutely do. Exactly. It is a big part of it.
It's not always the case. It's not always the case. But again, thanks ever so much for
Thank you so much for having
coming on the podcast and in this cozy environment.
As always, I love it. It's great. I appreciate it. Thanks,
Adrian.
Rebekah. Speak soon.
Bye-bye.
Bye.
Thanks for listening to Bricks and More. If you've enjoyed today's episode, please share it with a colleague or friend who would appreciate it. If you're not already, connect with me on LinkedIn, whether to say hello or discuss a destination, real estate, or hospitality project of your own. Finally, please rate the podcast on Apple, Spotify, or wherever you get your podcasts. Again, share the episode, connect with me on LinkedIn, and rate the podcast. I'm Adrian Strittmatter, and I'll be back soon with the next episode.